This is Richard Flax at MoneyFarm, talking about some of the things that have caught our attention over the past day or so. A couple of things to mention. First, on the GDP side, we've seen GDP growth numbers from a number of countries, the US, France and Spain. And in each case, we've seen that the drop in activity, and it was a decline in all three cases, was a bit deeper than economists had expected. And while it's hard enough to forecast economic variables at the best of times, and it's clear that this is a dynamic situation, still the extent of the slowdown and the speed of the slowdown has been a little bit faster than economists were expecting. And that suggests that the second quarter will be particularly challenging. Now, financial markets, as you might guess, have largely looked through this, and we're coming to the end of one of the strongest months over the past 40-odd years for equities in April. And really the driver, or one of the key drivers, has been really on the healthcare side rather than on the macro data. And we got some more positive news yesterday with the announcement that the one potential treatment, remdesivir, had shown some favorable results in a US study. Interestingly, this was the same treatment which had seen some news released last week from China saying that the results of a study there had not been particularly successful. So it speaks to a couple of things. One is that it remains a very dynamic situation. The other is that healthcare, as we mentioned, is to a large extent driving financial asset prices in the context of the speed of the return to normality and variables that can affect that. And lastly, that trying to trade short term over about news flow on potential treatments is very challenging. And then lastly, we had a statement from the US Federal Reserve, the US Central Bank. Fed Chair Powell came out and really said a couple of things. The first was that in their view, the economic recovery will be quite long and protracted. And secondly, that the Federal Reserve will continue to do whatever it can, whatever it needs to help support the economy. So really a message of low interest rates and significant monetary stimulus, bond buying and so on, likely for some time. But also in the context of an economy that, at least in the view of the Federal Reserve today, will take some time to recover. And perhaps that the V-shaped recovery that people are hoping for will prove to be a little bit longer than that. Thank you very much for joining us, and look forward to speaking to you again soon.